Investors and traders, welcome to the channel Market Chart Pattern. Today is 9th of July 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US tech stocks as we always do for this segment. This video is for educational purposes only and it is not a financial advice. New subscribers to the channel, thank you very much for subscribing and welcome. And the old subscribers coming to watch, thank you for watching our content. Okay guys, so we are going to take a look at Tesla stock. So this is the daily chart of Tesla, and in this one of the key themes or a pattern that we had been watching for quite some time is in this pink shaded area on the daily chart, and we were looking for essentially this $270 per share level as a key level because that's where the pattern actually completed, and we were looking for some sort of a retracement or a pullback to come through, which in fact did happen, and the market really, the price hugged this 20-day moving average and it has taken this level out. However, it is still consolidating here, so we'll still have to keep on watching this. And in the broader indices, we did a video about it yesterday, so I'll put a link to that as well towards the end of the video. You will also note that there has been a pullback over the last few trading days last week in the overall market, and of course that also impacts the individual stocks as well, but this stock remains pretty strong from a momentum perspective as well on the daily chart. So for example, the price is above the 20-day moving average, which is this blue line, and that is above the 200-day moving average, which is this gray line here. So from a momentum perspective, the stock is also pretty strong, but it is likely to go into some sort of resistance at this level. However, it's just consolidating here at the moment. So let's take a look at some bigger levels, as in longer term levels. So this is the weekly chart, and what we do have here is a level around $300 per share level, roughly speaking, which is around 61.8% Fibonacci retracement, coming around $295, and then also a 1.272 expansion, which comes around $300 per share level. So if the price is able to creep up higher, that's the kind of the next level we'll be looking at. We also have higher levels of around $350 per share level as well, but we'll have to take one thing at a time. And you can see that this rally has been going on since 24th of April in this swing, and it is getting a little bit extended as well, and we are seeing some consolidation taking place even on the weekly chart, where we have this doji formation. Doji is an indecision where the buyers and the sellers had a good battle last week, and they pretty much settled where no one party was a clear winner. Also, we'll just have a quick look at the longer term monthly chart that we are looking at, and we have a very interesting pattern formation. From a price perspective, it looks a little bit crazy to say or even think about it, but we do have this this pattern ABCD, which completes around $500 per share level, so that also remains a possibility. But of course, we have several resistance levels that we have been watching at the weekly chart levels and also at the daily chart here as well. So some resistance coming from structure here as well. This is something which we'll be watching on daily basis and will update you guys in our videos. Now let's take a look at Amazon. Oops. So the Amazon chart, if we look at this, this stock actually gets categorized under consumer discretionary. With the higher inflation, there has certainly been a pressure on consumer spending in general, and we can see that perhaps being reflected in the stock. So we were looking for $120 per share level to be reached, and it has reached and exceeded, but it's just really at this 78.6% Fibonacci retracement. And here is what we are looking at Here we go. It's very close to that. And it's being supported by the 20-day moving average. From momentum perspective, it's a positive momentum, but you just look at, you know, how slowly it's just creeping higher, slowly. It hasn't got that sort of, you know, gust of momentum in it. And maybe it just consolidates here, maybe it pulls back down to about 38.2% Fibonacci retracement, which comes around $110 per share level. That remains to be seen, but it hasn't taken out this left swing coming in from 17th of August 2022. That is something that we need to keep in mind, and in fact I'm just going to go and mark it here as well, because that is going to be a key indication that, you know, if the stock is likely to move much higher, then it needs to take this swing high out around $146 per share level. Let's take a look at Microsoft now. So look at the Microsoft stock. Wonderful. It has had one heck of a rally. Look, it's moving nicely in this channel formation. In fact, what it has done is it tested the top of the channel, not completely the top here, but it found resistance coming in from structure. That was the all-time high, I believe, on 22nd of November 2021, and it appears that it has formed some sort of a double top, which needs to be confirmed, because our confirmation will come once it is able to take these lows, and in particular these lows out. From a price action perspective, here the price is just hugging the bottom of this 20-day moving average. The previous corrections in this move higher have been of this much magnitude, highlighted in these red dotted lines, and it's possible that it moves lower. Maybe it's able to do it in ABCD formation to the bottom of this channel around $315 per share level, and this is something which we'll keep on watching. Just taking a look at this stock on a longer term weekly channel, look how beautiful cup formation which we are seeing. It tried to test the top here, price rejected it so far, and it's just consolidating within this big candle here. Maybe it's gonna take more consolidation, maybe a test to the bottom of the channel on the daily chart, and maybe it's just gonna give this weekly 20 week moving average to creep higher, and that might also provide support, and maybe then it's able to move higher. And if it's able to take these highs out on a weekly closing basis, then we could be looking at a leg higher, which could take the stock much higher. But for now, on the daily chart, this is what we're looking at. Perhaps some sort of a correction and ABCD formation could take it to the bottom of this channel, maybe a little bit lower to around $305 per share level. Below that, we'll have to reassess. Let's just quickly draw a 38.2% Fibonacci retracement. Let's see what level it comes at. Yep, so it also comes around $300 per share level. So this is gonna be our kind of a really important level to look at. If the price moves below that, then we have to reassess quite a few things. Now let's go and have a look at Apple. So the Apple stock is really strong. You can go and watch our videos that we did earlier in the year when the price was really testing around these areas, around $125 per share level, and there was a lot of negative news or videos being done about the price action of Apple. However, we were looking for a very key pattern formation, and in fact we were looking for some sort of a bottom to come in, which in fact it did. And just to show you guys on the weekly chart why we were so looking for such a bottom to come in, is because we had a number of Fibonacci ratios coming in at around $128 to $125 per share level, and it was really important that if this was a top of the cycle for Apple stock, this level had to be broken down convincingly. Now the price tried to test this level one time, two times, rejected, price lower, and started to move higher, and ever since just been going higher and higher. So that's good. Now in terms of if the price, because the momentum is really strong, daily chart, weekly chart, perhaps there could be some consolidation because of the news recently last week was a rhetoric about the increased interest rates coming in. So we'll have to wait and see how that will pan out when the Federal Reserve will have their FOMC meeting. But there is a possibility we could have even the next week a consolidated week price action. but we do have higher levels. That's the 1.272 expansion, which comes around $200 per share level, and above that the 1.618 expansion of this entire swing comes around $218 per share level, roughly speaking. So it's really important, if the Apple is going to have some sort of a major correction, this $128 to $125 per share level, this level gets taken out. It's really, really important. As long as this remains, it's a very, very, very strong support. And I would recommend you guys to go and watch those older videos in which I have explained in much more details what this pattern formation is that we are looking at for the Apple stock. Let's now take a look at Netflix. All right, guys. So the Netflix stock, we are watching for this pattern formation highlighted in pink shaded area, and we are looking at about $493 per share level that will complete this ABCD pattern formation. However, what we are also seeing is that price gets some sort of a pullback, then it retraces higher up, and maybe it's just going to be a slower momentum that price moves higher. There's also a possibility that price begins to actually move lower, and in that case we'll be watching this $413 per share level, because that was this much correction here. So this is the market symmetry concept, and then we had in this entire run higher a correction of this much magnitude. So here we go. That could in fact see $370 per share, but it looks like a price actually might just keep on moving higher, although it might just take quite a while because of the summer months, which could be slower months in terms of trading. And also we have seen in the months of August till October some stronger corrections coming in the recent past. So this is what we are looking at in Netflix. Let's take a look at Meta stock now. So the Meta stock has been really good. It's been really strong. We at one point we were watching this $200 per share level, because that was a 38.2% Fibonacci retracement. It did retrace a bit from here, but then it was able to convincingly take out and break this level, and that's when we turned bullish on the stock. Now it's just the next level we were watching for was between 270 to 277, or roughly $280 per share level. That was the 61.8% Fibonacci retracement and an ABCD formation, but the price has moved higher, but it's just consolidating here. So for now I don't have any higher levels, although certainly the stock can move higher, and there are other levels that we can also look at. For example, this CD leg might be extending to 1.618 expansion, which is $345 per share level, but just giving it more time to see whether this consolidation is going to take place, and whether it's just going to have some sort of a more correction coming. Otherwise, 1.618 expansion of the CD leg could in fact see the stock roughly going to about $350 per share level. Now let's take a look at Roblox. So Roblox is a stock which is related to Metaverse, and here what we think is it's moving in an ABCD formation higher to anywhere between $55 to about $60 per share level, and our analysis is really based on this point C. As long as the C point is not broken to the downside, we are looking for this ABCD formation higher. Now the stock has gone in a trading range for quite a while, the entire whole month, even a little more than that, and but the key thing is also not breaking down below to this $33 per share level. So that's good, and as long as this point C is intact, 56 to about $60 per share level is what we are looking at for Roblox in shorter term trading price target. Let's take a look at Shopify. So the Shopify stock is very interesting. If we are just to compare or look at just the e-commerce component, then the Shopify stock seems to be having a stronger rally from the bottom compared to Amazon stock. Although Amazon is just not e-commerce, they have the AWS part as well, which is cloud computing. But this one is pure kind of you can say it's a shopping cart, which has integrations with a few other platforms for advertising and stuff like that, and maybe you can do a few other things with it. What we are looking at is stock has been moving beautifully in this channel formation, and now it's just having this kind of formation, which could be looked at maybe some sort of a M formation or a rounding top perhaps. If this swing is taken down, there's a possibility it just comes down and test is the bottom of the channel. That remains a possibility. And if we were to draw a retracement, then we have the 38.2% retracement coming at about $50 per share level. That is roughly about $10 lower. However, we'll have some structural support coming right here from the bottom of this channel. So this is what we will be watching. So guys, this is all what we are looking at in terms of the individual key stocks that we like to watch here on this channel. If you enjoyed this and found this analysis of educational value, then please do subscribe to the channel and also hit that like button. Thank you very much. I wish you guys have a great weekend and good luck and good trading.